Lesson: Implementing AI tools for real-time risk monitoring and mitigation. Implementing AI tools for real-time risk monitoring and mitigation in supply chain management is a transformative approach that enhances decision-making capabilities, streamlines operations, and ultimately safeguards businesses against potential disruptions. This lesson, part of the Certified AI-Driven Supply Chain Analyst course, focuses on providing actionable insights, practical tools, frameworks, and step-by-step applications that professionals can directly implement to address real-world challenges. The application of AI in risk management involves leveraging machine learning algorithms, predictive analytics, and data-driven insights to anticipate and mitigate risks before they materialize. For instance, AI tools can process vast amounts of data from various sources, including social media, news articles, and market trends, to predict potential supply chain disruptions. This capability was notably demonstrated during the COVID-19 pandemic, where companies employing AI-driven tools were able to better navigate the disruptions caused by lockdowns and supply shortages. One practical tool in AI-driven risk management is predictive analytics, which utilizes historical data to forecast future risk events. By employing models such as regression analysis and neural networks, companies can identify patterns and correlations that may indicate potential risks. Walmart, for example, employs AI to predict weather-related disruptions in its supply chain, allowing the company to adjust its logistics and inventory management proactively. This not only minimizes financial loss, but also ensures a steady supply of goods to meet consumer demand. Furthermore, AI-powered real-time monitoring systems enable continuous oversight of supply chain operations. These systems utilize Internet of Things devices and sensors to collect real-time data, which is then analyzed by AI algorithms to detect anomalies or deviations from standard operating procedures. For example, IBM's Sterling Supply Chain Insights platform uses AI to provide real-time visibility and predictive insights, helping companies anticipate disruptions and optimize their responses. By implementing such systems, businesses can achieve greater operational resilience and agility. A key framework in AI-driven risk management is the integration of AI with traditional risk management processes. This involves embedding AI tools into the existing risk management framework to enhance its effectiveness. The risk management framework, widely used in various industries, can be augmented with AI by incorporating data analytics and machine learning at each stage of the risk management process. This includes risk identification, assessment, response, and monitoring, allowing for a more dynamic and proactive approach to risk management. Case studies further illustrate the effectiveness of AI tools in risk management. One notable example is the case of DHL, which implemented an AI-driven risk management system to enhance its supply chain resilience. By leveraging machine learning algorithms and big data analytics, DHL was able to identify potential risks such as geopolitical instability and natural disasters, allowing the company to implement preemptive measures and minimize disruptions. This demonstrates the potential of AI tools to transform risk management practices and improve supply chain resilience. In addition to predictive analytics and real-time monitoring, AI tools can also facilitate risk mitigation through scenario analysis and simulation. These tools enable companies to model different risk scenarios and assess their potential impact on supply chain operations. By simulating various risk scenarios, companies can develop contingency plans and optimize their response strategies. For example, Siemens utilizes AI-driven simulation tools to model supply chain disruptions and evaluate the effectiveness of different mitigation strategies, enhancing its ability to respond to unforeseen events. The implementation of AI tools for real-time risk monitoring and mitigation also necessitates a strategic approach to data management. High-quality data is essential for the accuracy and reliability of AI-driven insights. Companies must ensure that their data is clean, accurate, and up-to-date, which requires robust data governance practices. Additionally, data integration from various sources is crucial to provide a comprehensive view of the supply chain and enhance the predictive capabilities of AI tools. Moreover, the ethical implications of AI in risk management must be considered. The use of AI tools raises concerns about data privacy, algorithmic bias, and transparency. Companies must implement ethical AI practices to ensure that their risk management strategies are fair, transparent, and accountable. This includes conducting regular audits of AI algorithms, ensuring data privacy, and providing transparency in AI-driven decision-making processes. Despite the numerous benefits of AI tools in risk management, challenges remain in their implementation. These include the high cost of AI technologies, the need for skilled personnel to manage and interpret AI-driven insights, and the integration of AI tools with existing systems. However, the long-term benefits of enhanced risk management capabilities, improved operational efficiency, and increased supply chain resilience outweigh these challenges. In conclusion, the implementation of AI tools for real-time risk monitoring and mitigation in supply chain management offers significant advantages. By leveraging predictive analytics, real-time monitoring, and simulation tools, companies can anticipate and mitigate risks more effectively, enhancing their operational resilience and competitiveness. The integration of AI with traditional risk management frameworks further optimizes risk management processes, enabling a more proactive and dynamic approach. As AI technologies continue to evolve, their application in risk management will become increasingly sophisticated, offering new opportunities for businesses to safeguard their supply chains against potential disruptions.